Hey everyone, Eddie Wilson here with the Think Realty podcast. Thank you so much for taking time out of your day and joining us on your investing journey. We want to make sure that we're always providing tons of value to you. We've got a great guest here in just a second. But first, I want to say a quick thank you to our podcast sponsor, which is Real Property Management. A good property manager is going to put more money in your pocket than take money out. And Real Property Management does that. You can actually check out the Real Property difference by going to Real Property Management on their website, which is Real Property MGT. That's realpropertymgt.com. Go check it out. Thank you, Real Property Management, for always sponsoring the podcast. It's a privilege to partner up with you. And if you don't have a good property manager right now, go check them out. Our guest today is a guest that's been with us for quite some time. He is actually one of our resident experts and always on the stages at our Think Realty shows. And we're actually in Houston, and he'll be speaking in the conference tomorrow. And then also he'll be in Tampa. So if you haven't bought your tickets for Tampa, make sure you buy your tickets. Use the code podcast, and you get a buy one, get one free on that. Jason, thanks so much for joining us.
Yeah, absolutely.
Appreciate it. Yeah, you doing good?
Doing good. It's been crazy.
I saw you walk in with a sport coat, but now you got a jean jacket on. What happened?
Trying to look more hip.
Okay, got it. Yeah,
I think you're bringing that culture in.
I'm trying to, you know? Yeah.
I heard that you used to sleep in suits.
I did.
Now I don't think I ever see you in a suit.
Pocket squares, ties, slept in them. Yeah, that's great. I actually have, I'm not even wearing a suit tomorrow. I got out of bed today, and I had an interesting night in Houston last night. And thanks to a few people on our team, they took me to places that you probably shouldn't go to.
Okay.
I saw the interesting side of Houston I've never seen before. Almost died.
Really?
But it was good.
Would you care to elaborate a little?
No, it was a good time. But anyways, and I got out of bed and I had a sport coat and a nice pair of dress slacks, and I was like, I'm not doing that today. So this is what you get today.
Fantastic.
So I'm glad you joined me.
Yeah. What about tomorrow though?
I'm gonna dress back up.
Okay. See, I almost wore this outfit tomorrow, and I thought, that might be pushing it.
It's Houston.
Yeah.
Anything goes.
Anything goes.
Yeah. So the market's crazy right now. If you guys don't know Jason owns a company called Freaky Fast. They do everything from wholesale to fix and flip. They do turnkey, they manage funds, and then he also is involved in oil and gas and all kinds of alternative investments, pizza shops and coffee shops and all kinds of crazy stuff, which is awesome. Record labels, you're just into everything. It's good.
Try to diversify.
Yeah. So Jason, obviously has his hand on the market when it comes to real estate because he's investing in Knoxville, Cincinnati, Columbus, Georgia, looking at Cleveland, potentially Jacksonville, right?
Yep.
Florida. And he's just doing a fantastic job. He's built a great company over the past few years. Where are you at right now with the market? Like the 1,000-pound gorilla, it's like rates are potentially rising again today. Everything's moving. Investors to a degree are freaked out a little bit. There's hardly any properties to buy. I mean, where are you at? What are you feeling like right now in the market?
Man, I feel like it's just kind of like a shotgun splatter.
Mm-hmm.
Everybody has just a little bit of different opinion. Different people are freaking out more than others. Mm-hmm. Then there's some that are on one spectrum where they're just completely not sleeping and really just stressed out. So I think that's kind of interesting. The one thing that I am noticing is there's a lot of people that are over leveraged, and it could be just like that, and you find yourself over leveraged, or maybe you have a couple deals go the right way, and then you find yourself in a lot better spot. But I'm finding deals coming across my desk from pretty large groups that are just way over leveraged. Prices are already dropping. They bought too high. Yeah. And I think, in a hot market, they just got excited, like most of us did. And they didn't buy right. And I think that's the most important thing is buying right. So when you see that, they overpay, it's like, well, I'm not paying for that, right? I'll buy 40, 50 cents on the dollar. Right. So it's kind of interesting to see how more deals are coming available at a discount, which is exciting.
Yeah. So some people are not sleeping at night. Others are taking advantage of the market.
Right.
Where do you kind of land in all of that? What's your sentiment? How's your feeling?
It depends who I talk to.
Yeah.
Have you ever noticed that? You talk to one person and you get off the phone and you're like, oh my gosh, I need a drink.
Yeah.
And then you talk to someone else on the phone and it's like, okay, let's go raise a couple more $1 million, and buy. So I think that which is important to know as an investor, is like, who are you surrounding yourself with?
Right.
And I think it's good to not always just be pure optimistic, but then also not be like too pessimistic either, because I think you can talk yourself into a bad situation
Yeah, for sure.
and miss opportunities.
Yeah.
One of my biggest investors, for example, he's got tons of cash in the bank and he's freaking out because the bank presidents aren't calling him back. And it's like, well, just invest it in some assets and you don't have to worry about it.
Right.
But he also, experienced the 87 crash, I think, is the one that really hit him hard. And so from there, it
freaks
just
him out a little bit.
Yeah, so it's just kind of interesting to see how people's minds work.
To me, it's interesting. I feel like there's two types of mindsets. There's a consumer mindset and there's an investor mindset. And you really find yourself, you really begin to see who you are when things are turning south. If you run from fear, you are too scared, you start hoarding cash, like all of that, like you are never going to, in my opinion, you're never going to capitalize on the greatest opportunities. Like there's a reason why, Warren Buffett had close to $100 billion, I think it was 80-some billion dollars liquid a few months ago. And it's like, I got into a fight with the New York Times reporter on Twitter. You ever do that in the airport? You just get bored and see a fight with people on Twitter?
I do it all the time. It drives Tori nuts.
Super fun, yeah. Kills a great time in the airport. And so this New York Times reporter is like, he must be afraid. And I was like, okay, first of all, if you have $80 billion in cash, why would you ever think, what is there to be afraid of? Like, I mean, death maybe, but like you have $80 billion in cash. Like there's no fear, know? And it's like, they missed the whole entire point. It's like, no, he's getting ready to feed. He's a shark. Like he is a great investor. And I get the sentiment of holding cash today for the purpose of finding good deals, because they're coming and they are happening. I don't get it, especially in a high inflationary period, of holding it because of fear, right? Like that doesn't make sense at all. Like now you have a consumer mindset. The consumer mindset goes, oh no, banks are failing. Oh no, prices are going up. Oh no, milk is $6 a gallon. Eggs are $4 a dozen. It's like, but a true investor goes, oh, there's opportunity in somewhere in all of this, And I love that. I love that you pointed that out. So the market is getting difficult. But in difficult markets, we always find great opportunities. Where are the opportunities at that you're finding? You said you're finding deals 40, 50 cents on the dollar, but where do you find deals like this? I mean, are you finding people with packages of homes? Are you finding individuals? Are you finding the retail market? Like, how do you find these?
I think it's a collection of all those options and different marketing strategies. Like I think too, word gets around. If you buy a package deal, then when someone else hears, they give your name.
Sure.
Or speaking events. I spoke at a conference down in South Florida, and a guy heard me speak, talked to me, and then that led into like 6 different introductions to different people that eventually led to this deal that I just mentioned to you. So I think it's a little bit of all the above. Surprisingly though, the portfolio deals, there's a lot out there, and again, it's because people overbuy. There's some guys who are literally just picking up, bad notes and then turn around and selling those houses. And then what's interesting, kind of like the guy that I like to target, is the dude who's in his 80s. He doesn't really need any more money, but he's kind of tired of the up and down. He's got slums. I mean, he hasn't done anything with them, right? And so you can go pick him up 20, 30 cents on the dollar and then put some money into it, bring him up to a nice quality home and get a good tenant in there. So I like targeting those guys a lot as well. And I think they're going to be more and more available as the market starts
kind
to
of like
crazy.
End of life or end of cycle for investors. It's like now they either have to pass these houses that they haven't put much money into onto family members that probably don't want them, or recapitalize and pass cash onto their heirs or whatever.
And that's what the children want. They just want the cash. They care less about the houses. They don't want to work, And so the guy's like, well, I don't know what to do with them. And he's like, well, I'll buy them from you. And then there's different ways to be creative with that. If the dude's got like 100 homes, he may not want a huge tax hit, so maybe he might do some type of owner financing, and give you an opportunity to maybe pay off the in 5 years, 10 years, something like that. So there's plenty of opportunity like that, and I think for the investor who's wanting to get in to real estate, that's the way to do it, is to get involved maybe in a collective syndication deal. And then not trying to fix and flip per se, but just get on some good deals that you can buy at a really good price and just let them cash flow.
Now, we're talking more about the novice investor, but how about the passive bigger investor? I mean, I know that our podcast have some, whales they watch and they have a bunch of capital and they're looking for passive deals. You also service that group very well, and you have some funds. So do you mind just telling me about your funds and how you structure them and how people can get involved in that?
Yeah, so we have 4 different funds that we have. 3 of them are equity, and then 1 is debt. The debt fund's great if you don't want to own any properties, you don't want any of that liability, you just kind of want that cash flow coming in every month. Then the debt fund's great for you. And the debt fund lends me capital to go buy the houses, turn around, and then flip them to other investors or to our equity funds. So in theory, I've created my own bank and my own buyer. And then the equity funds, that's kind of what I'm starting to push people towards. We are starting a 4th equity fund. In fact, it should be ready to launch by the end of this week. And the whole idea is to allow investors to get in on the front side versus the back side. So my other equity funds, I'm selling houses that I've already rehabbed, that are already cash flowing, and they're buying between 90 and 100% market value. Now what I'm doing is allowing investors to come in before they've been rehabbed, so they get to cash in a little bit on that opportunity and get a larger equity play on the back end once the property's rehabbed. So I think that's the strategy to go right now.
Got it. And so these passive investors, like me, I mean, like I'm to a place in life where I don't want to be involved heavily in the construction process or whatever. So they're just coming in and they're essentially playing in either debt or equity. If they want to securitize their asset and they want to go to the equity route, then that's a little bit easier. But your debt's also securitizing against an asset too. So it's leveraged against the asset. And so then they come in and they just invest and they are kind of in the deal with you. What are some of the returns you're seeing in some of those funds?
Yeah, so on the equity side, it's usually anywhere between 9 and 12%.
Okay, that's solid.
Yeah, and plus, that's not factoring in any appreciation or depreciation that you're able to write off each year on your taxes. So those are kind of like cherries on top. And then on my debt side, it's between 14 and 18%.
Okay, so on debt, you're paying 14 to 18. That's awesome. Yeah, that's huge. And so you're using real estate as really an anchor for you. I mean, that's your primary investment source. Seems like you're finding good deals. It doesn't sound like you're buying in primary markets. It seems like you're buying in B markets or ancillary or tertiary markets, which is awesome because that seems to be where all the that seems where all the return is today.
Right. Yeah.
And then it sounds like you're also structuring in a way that just about anybody can play. They can buy it as a turnkey off of you, or they can play in both equity or debt. So that's real estate. What are you seeing as other investment opportunities for those that are going, real estate, I want to put money into hard assets, but I also have some tax issues that I want to offset by investing, or I want to look at other speculative investing. Like I know you're involved in a lot of other things. So like what are some of the other things you're seeing?
Yeah, oil and gas is great. It's the riskiest investment out there. I tell everyone, be prepared to lose your money. Like it's that risky, and you got to be willing to take that risk.
Sure.
But 2 things. 1, it's also the most high rewarding investment out there that I know of.
Sure.
You can do very minimal production and still generate 20-30% on your money. But the thing that really lowers a lot of that risk is the tax advantages that come with investing in oil and gas.
Sure.
If you are in need of a tax write-off, maybe you're going to take a huge tax hit, then I always encourage people to do oil and gas. And that's why I got into it. I first started, before I even got into real estate, I worked for an oil and gas company and learned that side of investing, and then got into real estate later on. And my goal was to get back into oil and gas, but for myself.
Sure.
So I want to own my own small EP company and just invest my money into these wells. But then talking to my own investors that are needing tax write-offs, like, okay, I'll give you that opportunity. Why don't you come in with me? And you're going to, depending on the kind of well, you can generate anywhere between 20 and 80% of a tax write-off.
Sure.
So instead of giving the money to Uncle Sam, why don't you invest in an oil and gas well, and maybe you'll see your money back too. So it's a
and
good
is that
opportunity.
Primarily in the state of Texas?
Yeah. Yep. I mean, there's wells in Oklahoma and stuff that are always coming across our desk, but Texas, it's backdoor. So.
Sure. Yeah, that's awesome. And so what's the size of investment that is needed to get into oil and gas? Is it like sizable? Because I always heard, you got to invest 150, 200 grand. I mean, do you need to invest that type of money into oil?
No, I think 25,000, 50,000 are great start off points. It really depends on 2 things. 1, your net worth, and 2, what type of tax write-off you need. If
Right.
you need like a $500,000 tax write-off, then by all means throw $250,000 into it.
Right.
You know, and then maybe find another investment opportunity that also provides that type of
Sure.
write-off. But you know, if maybe you're smaller net worth, or maybe you don't need a huge tax write-off, then 25-50 is a great way to dip your toes in the water. Another great strategy too is guys who are looking to convert money from a traditional to a Roth, and they know that they're going to take that tax hit, and they're
Right.
like, well, I guess I'll go ahead and do it. It's like, well, no, invest the money in an oil and gas project that we've got that
Sure.
will give you an immediate write-off, so you
Right.
don't have to pay your taxes for
Right.
converting your money from
That's a great point.
you know, your traditional to a Roth.
Yeah, that's
So
awesome.
there's so many different ways to be creative and structure it to help make that money go a little bit further.
Yeah. So as you look, you know, if you had a crystal ball, you look down the road a year, maybe a year and a half, 2 years, what do you think you will wish that you took more advantage of currently right now? You know, talk to Jason like 2 years from now, like what you know, like, or Jason 2 years from now, what do you think he's going to wish that you did more of right now?
Man, that's a great question.
Thank you.
Yeah.
I just figured I'd try to stump you, you know.
Oh, you
See
did a
what
good
happens.
job. Yeah. Let me think about this for a minute. How much time do we got? I think what I would tell Jason 2 years from now to this Jason is don't freak out.
Yeah.
Because I think a good deal is a good deal. It doesn't
Yeah.
matter if it's in real estate, or oil and gas, or you know, private equity, or
Right.
you know, some restaurant or a coffee shop, movies. You know, people are doing that right now because they need tax write-offs,
Right.
and it's a fun project, right? I don't think it's necessarily what you do. I think it's the fact that you do something and not sit on the sidelines.
Right.
I think that's what I would tell myself is don't freak out. You'll get through this just like everyone else. Talking about that one investor who was kind of freaked out. You know, he was telling me, you know, I think you've grown too big and things like that. And I was like, well, maybe so, but I'm here now, and I'm just going to keep pushing on forward. And you
Right.
know, this is where we're at now. This is where I want to be by the end of the year. And when I was done, he goes, well, you know, when I was in '87, I was 25 and I lost everything. He goes, I kind of wish I had the mindset you did. It was maybe a little further along. And so I think that kind of spoke to me is, yeah, you can lose your money. Yeah, you know, you could have
Right.
a lot of sleepless nights.
Right.
But don't quit.
Right.
I think that's the biggest thing. Is don't quit. Believe me, there's days where I want to. There's days, nights, you know, I want to.
Yeah.
But yeah, just I guess pushing through.
Yeah. You guys have, what's the number that you guys have under management or close to under management right now?
So it seems wild and almost too good to be true, but like I was doing my numbers again, and I was like, is that accurate? And I did it, and sure enough, 30 million
That's
under
awesome.
assets.
Yeah, that's great.
And almost 4 years of business.
Yeah, yeah, you've been crushing it in the last few years, and pushing. I know your big goals coming up. I mean, you're going way bigger, and I love that. You know, I think I would the same thing you say, right? Like to yourself. Like I think I'm going to say the same thing. Like perseverance when there's also fear involved.
Yeah.
You know, staying under that weight and avoiding fear and like choosing to pursue something versus choosing to run from something.
Yeah.
I know that there's a principle in my life that if I'm running from something, it never has a good outcome. But if I'm chasing something, it always has a good outcome. It may not be the outcome I wanted, but as long as I'm pursuing or chasing versus running from, and it's like it's that kind of concept of like anytime you're playing defense, you know, it feels like a lot of investors. You understand this analogy? A lot of investors right now are playing it safe, and it's the football team that decides, hey, we're up by 2 touchdowns. Let's play prevent. And let's just spread the field out, and let's slow this team down, and let's go to this kind of slow burn model. And you and I know what happens is it creates a shift in momentum.
Yep.
When I stop pursuing something, momentum changes, and it seems like everything moves against me at that point.
Yep.
You know, I mean, we're Ohio State Buckeye fans. Like that's like the bane of our existence, right?
Yep.
Like you go by a couple of touchdowns, and then you're just praying that the momentum doesn't shift. You
Yep.
know, like. And which happened to us this last year.
Yeah.
And,
Don't remind me.
but it's like you sit there and you watch that, and you know, it's like it happens to business too. It's a universal law, you know.
I think it's a good point, and it's funny you mentioned that because my COO, we were talking, and he's like, you know, you're better when you're proactive versus reactive.
100%.
And he's like, I feel like as of late, just being completely straight with you, you've been a little more reactive.
Yeah.
And he goes, we don't need you playing safety. We need you playing quarterback because that's
right.
where you're good.
Yeah.
And, so that's really interesting mindset is the offense versus defense mentality. And I've always wanted to be that Urban Meyer style offense. Just put points on the board, like run up the score. Keep going, run the ball down the throat and spread it out and just all over the field. And I think at times when I'm most stressed is when I'm not doing that.
Yeah.
And I think we allow either the markets, the media, or other people dictate who we are supposed to be instead of allowing ourselves to be who we're supposed to be.
Yeah.
And you're right. I think we find ourselves losing more when we try to play preventative defense.
You do. The momentum shifts and everything, the energy, your team's energy, everything begins to turn against you. And you don't even realize it until all of a sudden you're losing ground and you're like, why am I losing ground? I'm just trying to protect, what I'm doing. And
your team notices it.
They feel it.
I never thought that they noticed that.
Yeah, they feel it.
But they did. And you're right, if you're a great football team, there's that momentum, but then there's also the energy that everyone else feels.
Right. I coached basketball for a few years, and I coached during the era of when Steph Curry was first winning the championships. And what I hate Steph Curry because I'm a Cleveland Cavs fan, but I also have this deep respect for him, and the reason is because when I watch him, and I heard my whole life, offense wins games and defense wins championships, and it's like until Steph Curry came in, he's too small to play great defense, but he puts so much offense up on the board, he wins 4 championships.
Yep.
And it's like, for me, I had the same thing. We would be up by 8 to 10, and I wanted to play the game, and I made my team play the game as if we were down by 2. Literally, I would call timeouts and I'd say, you're playing like you're up by 20. I want to play like we're down by 2. Let's full court press. And it's the same thing. You cannot take your foot off the gas.
Yep.
And that's what I'm seeing all my friends do, unfortunately, is in this time period, they're seeing banks fail, interest rates rise, difficulty finding assets and deals, and they're like, maybe I'll just coast for a little bit. All my friends going on vacations right now, going out of the country, hanging out, hoarding cash, and the end of that is always something that they will regret. Because I know it's a universal law in my life. When I take my foot off the gas, when I began to play defense, the outcome is never what I want, because I'm running from something versus running to something.
I'm sure you can relate to this. During COVID, I feel like that's maybe the hardest I had worked, right? While everyone else was kind of just taking it easy because they didn't really have anything to do. I worked harder, and everyone's like, here's the downturn. This is not what we were expecting, but here it is. And so I started positioning myself, and I actually tripled my growth that year.
Right.
And then it turned out to be one of the best years, which a lot of people, that was the case for a lot of people. But it goes along with that mentality as if when things get tough, you just take it easy.
Right.
You could miss out.
It's that whole mentality of save money for a rainy day, and then on the rainy day you can spend it. It's like, no. If you work twice as hard as everybody else on the rainy day, you actually earn double because nobody else is earning. And so one principle that I have in my life is I've always doubled my net worth during a time of recession. So I began investing in the .com boom, early 2000s, and that was my first real estate investment. When everybody else was not investing, I began to invest. I just had the capital to invest. Then in 08 through 2010, I doubled my net worth again. COVID, I doubled my net worth again, and I told my CFO, Dave, I was like, look, we have, I believe, a 12-month window. I want to double my net worth again during this period. This is recessive activity. When I see people running out, it's the perfect time to run in, So that's good.
I think one of my favorite quotes, it's on a magnet on our fridge. It's John Wayne. And he said, courage doesn't mean you're not scared. It means when you're scared, you get on the saddle anyways.
Yeah.
And I think that's just a good mindset mentality to have is, hey, it's okay to be scared. Just don't quit. Don't give in.
It's awesome.
And be smart, you know.
Super wise words for sure. Thanks so much for joining us on the podcast today. Really, really appreciate it. I hope a lot of investors, especially novice investors that are worried about the market, feel the sentiment of what we're talking about, because there's not enough good, positive information out there that are pushing people forward. Media, men, and the market are all telling everybody sit on the sidelines, and it's important that they get in the game.
Absolutely.
Cool. Thanks. Appreciate it.
Yeah, absolutely. It's great to be here.
Very cool. Think Really, thanks so much for being a part of our podcast. If you don't mind, share it, like it, and subscribe both on YouTube as well as all the podcast channels. It's important to us to get feedback from you. So on all the social channels, we'd just love to hear feedback. What do you want to hear more of? What helped you on the show? If you want to connect with Jason, we'll definitely connect you with Jason. And make sure that you're participating with us on social. I want to say a quick thank you again to our our podcast sponsor, which is Real Property Management. Real Property Management is an awesome property management company that helps put more money in your pocket than take money out. They're a great support mechanism, and if you don't have a property manager that you're happy with, you owe it to them to go and try them out. See if they can help you. Let them quote some of your properties. And you can find them at Real Property MGT. That's realpropertymgt4management.com. And if you haven't bought your tickets yet for Tampa, we always provide the best discounts right here on the podcast. If you use the code word podcast, you can get a buy one, get one free. We already give you heavy discounts anyways, and we discount the price of the ticket because we just want you there. But I want to give you a buy one, get one if you put podcast in. Bring a friend with you to Tampa. On July 13th through the 14th, we're going to one of the hottest markets in America, Tampa, Florida, and there's going to be tons of investors, and I know you're going to want to be there. You do not want to miss out on this one. We've got money in the room, we've got deals in the room, we've got investment opportunities in the room, we've got experts in the room. You're not going to find a better place for a cheaper rate to get in the game if you're not in the game already. And also, the reason why we charge so little when others charge $500, $1,000 for tickets is because we want you to put your money into deals. We want to be your sidekick along the way, and we want you to take the money that you put into conferences and just get to Tampa and put your money in deals. That's so important for us, and that's what we're talking about with getting off the sidelines. Make sure you sign up for Tampa. We would love to see you there. Have a great day, and thanks for being a part.